Hello and a warm welcome to this quarterly update from SKAGEN Global. Portfolio Manager Søren Milo Christensen will guide us through what's happened in the fund the last quarter. And Søren will start by looking at the fund's performance last 3 months.
Yeah. Now, if we start with the results, absolute return of 3.5%, okay, not outstanding, in line with the benchmark, and bit the same picture if you look year to date, an absolute return of roughly 9%. It's okay, but of course it's not our ambition to be behind the benchmark. So again here, I mean, our focus is to create a strong absolute return over a 3 to 5 year horizon, and we're still very confident that if we continue to pick the right stocks, we'll also have a return that is better than the overall market.
Mm-hmm. But if you see the third quarter isolated, that was quite good, wasn't it?
No, I mean 3.5%. It is decent, as I said, but it's not something that it's outstanding, and you can say in line with the benchmark. Not too much to talk about there, I think.
Okay, all right. Let's move forward.
Yeah, no, I think if you want to look a bit in terms of what happened in the quarter, there's 3 sort of key messages for this slide. If you look towards the top end of the slide, you see quite a few European markets. That's of course a reflection of sort of increasing signs that the economy in Europe as a whole is moving in the right direction. That clearly had a positive effect for a lot of European equities. The second point is US equities. That is towards the bottom of the slide here. You can say for the first time in a long period, US equities took a bit of a breather. I mean, we've increasingly voiced in the latest months that we feel US equities are looking a bit stretched now, and perhaps the market is starting to agree with us. And then I think that the last point that is worth mentioning here is the continued fairly weak performance in the emerging market, and specifically markets like Indonesia, Turkey, and India, which had very, very weak performance last quarter. And we say for all of these markets, you had a fairly nasty cocktail of sort of falling equity prices combined with falling currency prices, which of course had a sort of a magnifying effect when we look at the returns in euros.
But if you have a look at China and Russia, the story is a bit more positive there, isn't it?
Yeah, it has. Yeah, I mean they've performed very poorly over the past 3 years, but we have seen some reversal this quarter. As you may recall, towards the end of last year, specifically for Russia, we saw quite a bit of value. We found quite a few names there, and you would say despite the poor performance that you've actually seen in the emerging market this year, most of our Russian names have done very well this year.
Very well. All right, let's move on.
Yeah, I mean, if you look at the winners and losers over the quarter, as always, it's partly a reflection of what we've seen in the overall market. But it is interesting to see that if you look at the winning side, actually the top 2 names are both emerging market companies, and as you mentioned, Russia and China. So if you start with Gazprom, a Russian gas producer, you can say share price was really depressed. Everyone hated the stock. That's of course always a good starting point. And then on a fundamental basis, you've clearly seen an improvement in the gas market in Europe. So after a very cold winter, where we spent a lot of electricity heating the houses, we had a fairly hot summer, again using a lot of electricity to cool down houses. So you can say during the summer month, normally utility providers in Europe, they sort of use lower volumes to fill up the inventory. And they've clearly been behind the curve. You've seen, for that reason, a very tight sort of supply-demand situation that have had a positive effect on spot prices of gas in Europe. So you can say rising spot price in gas doesn't have that big an impact on Gazprom, because they sell the majority of their gas on these oil-linked gas contracts. So basically prices depend on the oil price. But you can say the big concern in the market has been whether Gazprom was able to maintain these oil-linked prices because the spot price on gas has been lacking the oil link price quite significantly. So of course now with the spot prices moving up, sort of that increases Gazprom's opportunities to maintain the pricing mechanism they have today. Mm-hmm. So that's clearly very positive.
All right. So from sort of the losing side of the balance sheet here to the winning side.
Yeah. So, and I mean, if you look at the other winner, China Unicom, again Chinese company, Chinese mobile company, the reason for the strong performance was partly a very strong second quarter number. So we saw increased evidence that China Unicom is gaining a lot of market share in 3G. That is of course positive in itself, but I think that the real positive kicker is that this is a fixed cost business. As they're filling up the 3G network, that has a very positive effect on their margins. And so for that reason, we've seen a very rapid increase in earnings over the quarter. And then you say, towards the end of the quarter, there were regulatory noise or rumors that the regulatory environment would change a bit in China Unicom's favor on expense on some of the other operators, specifically China Mobile. Of course, if this happens, this is positive, but we've actually taken sold off slightly in China Unicom because we don't feel we really have an edge here in terms of forecasting the outcome of regulatory changes. Mm-hmm.
All right, let's have a look at the flip side of this coin.
Yeah, no, I think if you look on the losing side, you have State Bank of India on top here. Clearly, of course, being impacted with the weak performance of Indian equities overall. You can say on top of that, if you look at the last quarter, clearly we were hoping to see that credit cost in India was peaking out. But it seems like we have to wait a few more quarters for that to happen. So I mean, the fundamental situation hasn't improved, and for that reason, that clearly hit the stock price as well. Mm-hmm. Then you have Mosaic, a fertilizer company, particularly strong in potash. Now, the potash market has historically been a very consolidated supply side. It's basically been a cartel. So for that reason, they've been able to maintain prices at a high level. And in the quarter, you saw one of the big players, Uralkali in Russia, coming out saying that they would no longer keep the discipline. They would focus on volume. For that reason, that of course, if that were to happen, have a negative impact on prices. And for that reason, the stock took a bit of a beating.
Mm-hmm. Okay. Right, moving on.
I mean, if you look at the changes we've done, with the weak performance in emerging markets this year, but basically over the past 3 years, we are increasingly finding opportunities in emerging markets. So if you look here, I mean, there's 4 new names. All 4 of them are emerging market names. Vale and Gafisa, both Brazilian names. Vale, an iron ore producer, and Gafisa, a real estate developer. And say very briefly, we've been a bit hesitant in moving into some of these raw material companies, despite valuation looking attractive. But with the latest round of selling of raw material companies, latest round of selling of Brazilian equities, latest round of selling of emerging market currencies, the risk reward in Vale started to look really attractive, particularly if you look at the cash flow profile of the company going forward. For Gafisa, it's more point of them having historically have a very stretched balance sheet, a lot of financial risk. But what made us buy into the stock was the fact that they sold one of their key assets last quarter. That basically fixes their balance sheet. It removes sort of the tail risk of the company. And we think that the market is pricing in a way too high risk premium in this the company, particularly given the fact that we're expecting to see a fundamental improvement over the next 3 years. The 2 other new names, Tata Motor, again, it's listed in India, so was pressed by the poor performance of Indian equities. Again here, if you look at where they make their money, it's basically outside of India, so it was a unique opportunity to buy into a really strong franchise because of weak Indian equity prices.
Yes, and it's worth mentioning that Tata both owns Ford and Jaguar.
Jaguar and Land Rover.
Land Rover, sorry, yeah.
The 2 big brands, yeah. And then the last one, OCI, a Korean chemical producer. They're big in polysilicon, which is used in the solar industry. You can say what made us buy that case is basically we were invested in REC in Norway, do the same thing, we made a lot of money on that investment, and then looking at some of their peers, it's pretty obvious that the analysts in Korea have not caught on to what has changed, or the changes you've seen in the solar industry, which is clearly for the better, and for that reason it was a unique opportunity to buy into that stock.
Very well. All right, so the holdings that you've reduced your position in?
Yeah, I mean, we start on top here, neighbors. It's fair to say that there's been some margin pressures in a lot of their segments. We haven't completely been satisfied with the execution from the management. For that reason, we sold out. We saw better value elsewhere. If you look at what we've increased in SKO, also an oil service company, and with much better quality in terms of the assets, much better quality on the management. Mm-hmm. The two other sort of companies that left the portfolio, TRW and SCA, similar stories here, very strong share price performance, also strong performance of sort of operational characteristic, but clearly we've seen share prices move ahead of operations, so we no longer see any upside, and for that reason we sold out of those two names.
Very well. Okay, looking forward.
Yeah, this is the top 10 holding. Again, I'm not going to go into each and every one of them, but I think what we care about is the valuation of the overall portfolio. So if you look towards the bottom of the slide here, top 10 holdings trading at a P in 2014 of 6.6. We clearly think that is very attractive, and it clearly makes us comfortable in saying that we should be able to continue to produce a strong absolute return going forward. But I would also say that we normally don't communicate in terms of what we expect on a relative basis versus the market, but with the very weak performance you've seen in emerging market equities, with the very strong performance you've seen in US equities and the valuation they are trading at today, I think we are increasingly feeling comfortable that we will also produce a strong relative return going forward.
Fingers crossed.
Yeah.
Okay. Yeah. So the next slide is one of the most interesting cases in SKAGEN Global at the moment.
Yeah. Mm-hmm. Yeah. So normally we sort of have a slide on a new investment, mm-hmm. and Nordea is not new. It's something that we've had in the portfolio from before. Mm-hmm. It's the biggest bank in Scandinavia. But it's a stock that we increased significantly last quarter. It's now a top 10 holding. And say we increased by participating in the placement of shares from the Swedish state as they sold off their last shares they had left. The investment thesis is pretty simple. It's about capital return. So Nordea is already very well capitalized. They already pay a nice dividend, but we think that they can pay a lot more. And we have a large shareholder in Sampo, where we think that now with the Swedish state going out of the picture, they're going to be much more aggressive in terms of asking management for higher dividends, higher share buybacks. On top of that, you can say on an operational basis, Nordea can clearly still do a lot in terms of adjusting their cost base. And if you look at what happens in the real estate market in Denmark, that will clearly also have a positive effect on Nordea in that country. Mm-hmm. So say to sum it up, of course being a bank, they are dependent on what goes on in the macro environment. But for this stock to work, we simply just need to see management doing the right things. I think we expect them to do that. If they don't, we have a strong shareholder that has the same interest in us, clearly has the power to get the changes that we would like. So we feel very confident with that. And you see on the downside, with a very low starting valuation, we feel we have a good protection on the downside. So a very high conviction case for us at the moment.
Very well. Any more slides?
No, I think it was the last one.
All right.
Yeah.
Okay. So to sum it up, you're pretty well, you're not thrilled about the quarter as such, but you're not that depressed about it either.
No, I mean, 3.5% in a quarter, that is okay. You can say if you want to talk in relative terms, Again, here with emerging market equities continue to underperform, and given the already large weight we have in emerging market equities, we're feeling pretty confident that it was an okay quarter. And as you can see on the sort of winning and losing slide, we had quite a few of our emerging market companies doing rather good.
Very well. And looking ahead, you are pretty confident that you will actually be able to deliver good relative performance as well.
Yeah, I mean, I think that you are clearly starting to see some very large discrepancies in terms of valuation, and that obviously gives us good opportunities both on an absolute basis and on a relative basis.
All right. Thank you very much, Søren Milo Christensen. That will be the final word from us today. Should you have any more questions, don't hesitate to give us a call or send us an email. Thank you so much for watching.